Good morning, everyone. It's Darius Dale here to present our macro minute for Wednesday, October 13th, 2021. So not a ton going on in the markets this morning in terms of what's really jumping off at the screen to me today. Yesterday, we got the JOLTS data out of the U.S. that was down 700K to 10.4 million. That's the sharpest decline we've seen. In fact, the first decline we've seen since April of 2020. You also had the quits rate within that series to jump up to 3.3%. That's an all-time high. This data rhymes with the NFIB data we got yesterday in terms of, it's really showing the cost of doing business is really starting to slow business activity. You had the headline NFIB, the hiring plans and CapEx plans all down, whereas you had the job openings halt their field, the fewer no qualified applicants, and the cost of doing business and compensation plans all ticking up. So you're having a little bit of a stagflation there in terms of the most recent data we're getting out of the labor market in the U.S. Stagflation in Europe as well. Germany headline CPI accelerated 70 basis points to 4.1% year over year. That's an all-time high for that time series. A core CPI accelerated 40 basis points to 2.5%. That's the highest we've seen since October 15. Again, this rhymes with the zoo data we saw out of Europe yesterday, where we saw leading indicators slow in October. So again, I said this last week, and I'm going to repeat it again. If stagflation becomes a risk, bonds are a buy. I'm going to go to my chart here. We're seeing the 10-year Treasury yield kind of back off, the upper boundary of our probable range. It's got downside to 148 if growth really becomes an issue, particularly as we get into the thick of earnings season and we get some updates out of corporate America. But in terms of what's overbought on my signal as well, it's got WTI overbought still, and then oversold euro and the dollar versus the Canadian loonie. With that, Darius Dale presenting our macro minute for Wednesday, October 13th.